for Facebook today. The social networking giant is all set to list on the Nasdaq in what could be really Silicon Valley's biggest IPO ever. Well, let's take you through some of the facts. Facebook, for one, has priced its shares at $38 apiece, with around 421 million shares that are up for grabs. Now, reports seem to suggest that its share price could even rise by as much as 30% after listing. Morgan Stanley, JP Morgan and Goldman Sachs are the lead advisors for the listing, and Facebook co-founder Mark Zuckerberg, remember, holds the majority in the company with a little over 55%. But here's a Reddy Reckner on everything you need to know about the Facebook IPO.
Facebook has priced at $38 a share, the high end of the range, making it the biggest internet IPO in history.
Given the demand that we've seen in the last couple of weeks for the stock, it doesn't take a genius to say that the stock will likely pop, at the open. Again, I think the short-term actions of the stock will be driven more by emotion, will be driven more by just the demand-supply economics, not enough shares going public.
Now begins the next chapter of Facebook. CEO Mark Zuckerberg may talk a lot about focusing on the users, but his new partners, the shareholders, are in it for the money. And money is already an issue because growth has already become an issue. Revenue was down 6% in the first quarter from the fourth, the first quarter-on-quarter drop since at least 2010. Advertising made up the majority of the company's close to $4 billion in revenue last year, but with a high-profile advertiser like GM pulling out and industry questions about the true impact of Facebook ads, there needs to be more.
I wouldn't be surprised if at some point there starts to be some fees for some of the services that Facebook provides to its customers, because there are shareholders that have to be paid.
Facebook also makes money by taking a 30% cut of revenue generated by Zynga via Facebook credits, but growth there is slowing. The social network still hasn't really figured out a strategy to make money on its users who access it on smartphones, but when it does, that could add to the bottom line. On its website, Facebook needs to maximize the exposure of the ads that it does have by leveraging its close to 1 billion users to do the heavy lifting.
You're going to start to see content that gets shared and passed along, and advertising that gets shared and passed along, where the initial exposure is just the jumping off point, and all the value gets created when people start sharing it with each other.
Analysts say Facebook has plenty of cash to buy potentially lucrative businesses, and that too could add to cash flow. Its recent $1 billion deal with Instagram will close later this year.